Hello everyone, welcome to another video. Today we will be solving accounting paper 1 multiple choice question for O levels, and we will be looking at May-June 2024, and this is going to be variant 2. Again, as you all know, that you will have 35 multiple choice questions and you will have 1 hour 15 minutes to answer all 35 questions. So before I get started with solving the questions, I would just like to request that if you find this video helpful, please don't forget to subscribe to my channel. For more videos like these, I have solved these papers for past 10 years, starting from 2010. So you can watch those videos as well. And I also have other videos where I have discussed financial accounting topics, like how to make journal entries, if you're stuck in how to make journal entries. So you can watch that as well on my channel. And you can also feel free to share this video with your friends if you think it's going to be helpful to them as well. So let's get started with our first question of this paper. Let's scroll down. So starting with question one, how does a trader use the information provided by financial statements, right? We all know companies have financial statements, 4 types of financial statements. So how do traders use that information, right? To calculate the amount of cash drawings taken? No, not really. It's about how the trader is going to use different type of financial statements. Here, it's only going to talk about balance sheet only, right? So you have to take into account all 4 financial statements and how it will be used. So likely option, it's actually the correct answer for multiple choice 1 is option D, is to compare the business performance over a number of years, right? So the trader is going to actually look at different financial statements and compare performance over different years to understand if the business is doing good or bad, or if the investment is worth it or not. But that would be an investor part. This is a trader part. So he or she is just going to look at the performance of the business. Right. So the correct answer will be option D for multiple choice 1. Let's look at multiple choice 2. So multiple choice 2 is basically asking what was the total of the liability. So if I scroll a little up, right, so we have the full shot of question 2. So the balances remaining on the books of a business after the preparation of income statement included the following, right? And what was the total of the liability? So you have to identify the type of liabilities. This is a liability. Wages due is a liability. Rent prepaid is an asset. Trade receivable is an asset. Trade payable is a liability. Motor vehicle is an asset. And this is also a contra asset account, but it's not a liability. So we have 3 liabilities here, which is 10,620. And then the other one is 4650. Sorry, this is 50. So when we add these numbers together, we should receive the total amount of liabilities, and that's going to be, let me run the math in here for you. That will be 15,270. You can always run this yourself as well, but for the sake of this video, I have done it myself as well. So the correct answer for multiple choice 2 would be option C, 15,217. 270 is the total amount of liabilities. Let's move on to question 3. So question 3, Jamil's financial year ends on 31st December. On 1st January 2021, he brought down a debit balance on his stationery account. What does this balance represent? So it is stationery. It has a balance brought forward on the debit side. The amount owing for stationery on 2020, not really. Amount, this is going to be a liability, but stationery is not a liability account. Amount paid for the stationery during 2020, it's actually incorrect because we are looking at year 2021. So you can cross out B and C because it's talking about 2020 and we are not concerned about 2020. We are concerned about 2021. So the correct answer for multiple choice 3 is option D. It is inventory of stationery on 1st January 2021. Let's move on to question 4. So question 4, Alex issues credit notes in August and entered them in the correct book of prime entry, which is the first place of entry. That was prime entry means. How was the total of this book of prime entry recorded in the nominal ledger at the end of the August, right? So it will be debited to sales returns account because credit notes are issued to its customers, right? To its customers. So those were sales, right? So they have been issued to to customers of Alex, i.e. sales, right? So customers have returned those goods because they are faulty. So it will be debited to the sales return account. So the correct answer for multiple choice 4 is going to be option D. Let's look at multiple choice 5. Which business documents are used as sources of information to make entries in the cash book, right? So we are concerned about entries in the cash book. So when I scroll through these options, it is very clear that bank statement will be used for cash, check counterfoil, pay in slip, and receipt. So the correct answer for multiple choice 5, as seen here, would be option C. Let's look at multiple choice 6. So multiple choice 6, what is the double entry of recording a check payment to a credit supplier? So you have paid to the credit supplier, right? So it's a supplier, it's actually accounts payable, in other words, or purchases. There we don't see a term for accounts payable here, but purchases ledger account would be correct. So option A and B is incorrect because bank is an asset account, and whenever asset goes up, it's debit. In this case, asset is going to go down. So bank is going to be on the credit side. So it's either option C or option D. Now, since this is a supplier, it's an accounts payable. It's related to purchases. It is related to purchases. So the correct answer for multiple choice 6 would be option C, that is debit purchase ledger account. So reducing the payable, and credit bank account because the payment has been made. So reducing that bank account as well. So let's look at multiple choice 7. So multiple choice 7, a bookkeeper made 2 errors which cancel out each other. Which type of error did he make? It's compensating error because it's canceling out each other. So the correct answer for multiple choice 7 is option A. It's not really B, C, and D. It's compensating because it's canceling out each other. So the correct answer for option multiple choice 7 would be option A. Let's move to multiple choice 8. So multiple choice 8, the totals of trial balance did not agree and 200 was debited to a suspense account. The bookkeeper then checked the books and found the following 2 errors. A sales invoice of 700 had been recorded in the sales journal as 770. So it's up by 70 here. The sales journal had been totaled incorrectly. What error was made when the sales journal was totaled? Right. So basically, we don't know this amount, but we know this amount. So the total error actually by default, this is also going to be on the credit side. It would be overcast. It will actually be overcast by 200. This includes the $70 in this. So the correct answer for multiple choice 8 would be option B. Let's look at multiple choice 9. So multiple choice 9, a trader took some goods from business for his own use. He credited the purchases account with the cost price of goods, $200, and credited the sales account with the selling price of $300. So now, which entries did he make to correct that error, right? So he actually, what he did, he debited purchases for 200 and then credited sales for 300. Right, what he should have done is he should have he actually credited purchases too. So if you look at it, he has credited in total of 500, right? So it's actually, if I look at this, I know the answer would be option B, but for the sake of explanation, I would say he should be debiting drawings 200, and then he would have to credit purchases in order to reduce the cost of goods sold, right? So this part is actually correct, but he needs to make this entry and he needs to remove this sales amount because he cannot sell himself this. So he needs to debit the sales to correct this as well, right? So the correct answer for multiple choice 9 would be option B, debit drawings by 200 and then reduce the sales amount. He reduced the sales amount by 300 and then credit the suspense account by 500 to resolve or correct this error. So the correct answer for multiple choice 9 is going to be option B. Let's look at multiple choice 10. Multiple choice 10, what would result in the cash book balance being lower than the bank statement balance? So cash book balance is supposed to be lower than the bank's. So bank balance is higher than the cash book, right? So payment by a customer directly into a bank account was not recorded in the cash book is the correct answer. So the correct answer for multiple choice 10 is option C. Because the customer paid directly to the bank, it's not shown on the cash book, right? He or she paid directly to the bank, and this is why the owner of the business could not know that the cash from the customer was received, and therefore the cash book balance would be lower than the bank statement balance. So the correct answer for multiple choice 10 would be option C. Let's look at multiple choice 11. Multiple choice 11, the bank statement of a business showed a credit balance of $280 on 31st December. At that date, there were unrepresented checks of 312. A standing order of 20 had been incorrectly entered as $22 on the bank statement. What was the balance in the bank column of the cash book on 31st December? Right. So it has a negative 280 because it's a liability. It's on the credit side. Then there are unpresented checks. So we will add that unpresented checks, right? This will increase the amount. And because there was a $2 error, $2 in excess were deducted. So we will deduct that $2 as well. And then this should give us the answer of $30 on the credit side. That would be the correct answer for multiple choice 11, which this would be option A. Let's look at multiple choice 12. A business keeps a complete set of book of accounts, which is not used as a source of information for making entries in control accounts. And because control accounts are used to check for arithmetical accuracy, they're not going to use the ledger information from ledger, because the ledger is the second or nominal book of entry. So that's why sales ledger also could have error. So if sales ledger has error, then we will not be able to check for arithmetical accuracy. So sales ledger balances will not be used as source of information for making entries in control accounts. The correct answer for multiple choice 12 is option D. Let's look at multiple choice 13. Which item did not appear in purchases ledger control account? So we are talking about purchases ledger control account. The answer is clearly option D, return inwards, because this is related to sales, not purchases. For purchases, it would be return outwards, right? So the correct answer for multiple choice 13 would be option D. Let's look at multiple choice 14. So multiple choice 14 is also, it has also appeared in few of other past exam questions. Actually, I think probably it did appear in October, November 24 or October, November 23 or May, June 2023. So you can watch my video. But this question is fairly very common. So it seems like it appears every now and then. So let's look at question 14. The cost of repairs to machinery was debited to machinery account. What was the effect of this error? So since the expense is understated, our profit is going to be overstated, and machinery account will also be overstated. So the correct answer for multiple choice 14 would be option A. Let's look at multiple choice 15. So multiple choice 15, Elsevier purchased a motor vehicle costing $8,000 on 1st January 2018. It is depreciated at 40% on the reducing balance basis. Which journal entry records the depreciation for the year ended 31st December 2019? So it purchased at the beginning of 2018, and then we need to calculate the depreciation expense or the journal entry on 31st December 2019. So usually it's going to be income statement and provision, not this. So C and D would be incorrect. So it's either A or B. Now, if you calculate, so 8,000 times 40% gives you 3,200. So that is the depreciation at the end of 2018. So this is the depreciation at the end of 2018 for 2019, right? So we need to calculate the depreciation at the end of 2019. So B is also incorrect because it's mentioning first year depreciation. So the second year depreciation is going to be 1920. And how to calculate that is very easy. You will just take 8,000, which is cost. You deduct the first year depreciation, which is 3,200. Sorry for that extra zero, 3,200. And then you will multiply it by 40%. It should give you 1,920. So we'll debit income statement because that's an expense item. And then credit provision for depreciation of motor vehicle, which is a contra asset account in the amount of 1920. So the correct answer for multiple choice 15 would be option A. Let's look at multiple choice 16. So multiple choice 16, a trader sold one of his vehicles. What is the journal entry to remove the total depreciation on the vehicle sold? So you need to remove the total depreciation, and total depreciation is provision of depreciation, as we have seen in the question prior to this in question 15, right? So it's either C or D because it has to be on the debit side, not on the credit side, because it's always on the credit side normally. So it's not option A, it's not option B either. It's either C or D, right? So we will not credit, we can credit motor vehicle, but here we have a better account which says disposal of motor vehicles, right? So the correct answer for multiple choice 16 would be option D. We will debit, the trader will debit depreciation for motor vehicles and then credit disposal of motor vehicles. So the correct answer for multiple choice 16 would be option D. Let's look at multiple choice 17. Multiple choice 17, why is it important to match costs and revenue so that every debit entry has a corresponding credit entry? Not really. It's actually option C. Multiple choice 17 has a correct answer of option C, to enable better comparison of profit from year to year. And that is why we need to match cost and revenue of the same year, not for these other reasons, A, B, and D. It has nothing to do with bank balance. Actually, if you know, this has nothing to do with bank balance. Every debit equals credit is a different concept. And then for option B, so that business does not incur any loss is not even related to cost and revenue. Why it is not related is because its losses depend on revenue minus expenses. That's the equation, right? So if your expenses are more than revenue, you will incur loss. The trader will incur loss no matter what, even if they try to match the cost and revenue. This does not make sense, right? So that's why the correct answer for multiple choice 17 would be option C, to enable a better comparison of profit from year to year. It's about consistency. Let's look at multiple choice 18. So multiple choice 18, Devendra prepared the following journal entry. Which statement is correct? So we have debit irrecoverable debts 714, and Tobias, which is accounts receivable, probably 714. So the correct answer for multiple choice 18 again is going to be option C. Tobias cannot pay the amount due to Devendra because it's an accounts receivable. And the journal entry actually tells me that Tobias cannot pay, and because we have credited accounts receivable, because generally we debit accounts receivable, right? So when Devendra would have sold the goods to Tobias, he would have debit Tobias and then credit sales revenue. That's what he would have recorded in the first place. But since Tobias cannot pay, so he has recorded that in his books, and that's what this entry actually means. Tobias cannot pay the amount due to Devendra. So the correct answer for multiple choice 18 is option C. Let's look at multiple choice 19. Multiple choice 19. So multiple choice 19, Alex purchased goods costing $1,000. She planned to resell the goods at a markup of 25%. These goods were unsold at the year end and were found to be damaged. Alex estimated that these could be sold for $600. What value should be shown for these goods in the year-end financial statements? Right. So it's asking, it's basically inventory valuation. This question is about inventory valuation, closing inventory valuation. And the concept for that is lower of cost or net realizable value, which is also the short form is NRV, but the full form is net realizable value. Now the cost is $1,000, but it can only be sold for $600. So business can only record it for $600. So the correct answer for multiple choice 19 is going to be option B. Let's look at multiple choice 20. Unlimited liability is one of the disadvantages of operating as a sole trader. What is the correct explanation of unlimited liability? A sole trader cannot take a bank loan. No, he can still take a bank loan. A sole trader has to manage their business alone. This has nothing to do with unlimited liability. This is just a characteristic of what is a sole trader. A sole trader cannot use private funds to repay business loans. Yes, he can or she can. A sole trader may lose both their business and personal funds, and that's exactly what unlimited liability means, because in unlimited liability, the sole trader puts his business and personal assets at stake. So if the business goes bankrupt, the owner of the business will have to pay using his personal funds. So the correct answer for multiple choice 20 would be option D. Let's look at multiple choice 21. So multiple choice 21, which item is the current asset, which is very fairly easy. Bank overdraft is a liability, loan is a liability, prepaid income is a liability. So the correct answer for multiple choice 21 is going to be option D, work in progress, which is also inventory in manufacturing accounts. Let's look at multiple choice 22. Let's move on to multiple choice 22. So 22, where is interest on drawings entered in the accounting records of partnership business? If you know this, interest on drawings is usually is always on the debit side of the partner's current account, and there's only one entry, right? There's only one which is saying debit, right? So the correct answer for multiple choice 22 would be option B. It's going to be credited on the appropriation account, and it will not show in partner's capital account, which is the case. And it will be on the debit side of the partner's current account. So the correct answer for multiple choice 22 would be option B. Let's look at multiple choice 23. T Limited was formed on 1st April 2019. A total of 220,000 shares of $2 each were issued, and the shareholders were asked to pay 75% of the share value immediately and 25% on 1st April 2020. By June 1st, 2019, holders of 190,000 shares had paid the amount due. What was the paid up capital on 1st June 2019, which is this date, right? So 190,000 shareholders have paid. It's $2 each, and they must have paid 0.75% because the immediate required payment is 75%. When we do the math for this one, so let me just quickly calculate on my calculator as well. So it would be 190,000 times $2 times 0.75. That will give me 285,000. So the correct answer for multiple choice 23 would be option A. Let's look at multiple choice 24. Which items would appear in the statement of changes in equity of X Limited for the year ended 30th June 2020, right? 30th June 2020. Interim dividend paid on 31st March 2020 will appear on June statement. Yes. Proposed dividend for the year ended 30th June 2020. Proposed dividend will not show up. Proposed final dividend for the year ended 30th June 2019, paid on 31st October 2019. So this will also show up. Transfer to general reserve on 30th June 2020 will also show up on the financial year end of 30th June 2020. So the correct answer for multiple choice 24 would be option A. 1, 3, and 4 would appear on statement of changes in equity of X Limited for the year ended 30th June 2020. Let's look at multiple choice 25, which is seems like provision for doubtful debts. So multiple choice 25, company's financial year ends on 31st March. On 31st March 2021, trade receivables were 45,000. On 31st March 2022, the trade receivables were 41,000. So this is your opening receivables. And then this is your closing receivables. An irrecoverable debt of $1,000 is yet to be written off at 31st March 2022. The provision for doubtful debt is to be maintained at 5%, which means that even for the opening, it's 5%, and for closing as well, it's 5%. What is the effect of the irrecoverable debt and adjustment to the provision for doubtful debts on the profit for the year ended 31st March 2022? So opening provision for doubtful debts you will calculate would be 45,000 times 5%. And then the closing would be 40,000 times 5%. Why 40,000? Because we need to deduct this $1,000. So it would be 41,000 minus that 1,000 of doubtful debt. Right? So this is going to be 2,000. 40,000 times 5% is 2,000. We will do the math for other and calculate this. It's 45,000 times 0.05. 45,000 times 0.05 is 2250. Is 2250. So when we draw the provision for doubtful debt account, so if you draw the T account, this would be 2250. We have $1,000 here, and then the final balance is $2,000. So there will be a decrease of 750. So the correct answer for multiple choice 25 would be option A decrease of 750. Will be the answer for multiple choice 25. If you want how to calculate 750, that would be 1,000 plus 2,000 minus 2250 will give you the decrease of 750. So that's how you will calculate the decrease of 750. You can do by T accounts or by this equation here, and then that will give you a reduction of 750 on the profit side. Right, so let's look at multiple choice 26. Multiple choice 26. A club received subscriptions from members totaling 12,600 in the year ended 30th April 2019. The following information was available. Right, subscription paid in advance, subscription in arrears for, so this is opening. And then this is closing, as we can see from the dates. Which amount appeared in the income and expenditure account for subscriptions for the year ended 30th April 2019? All right, so we'll start with 12,600 is the total received from the members, right? So 1,300 must have been received, which were paid in advance, right? And then we will deduct this minus 800 and then plus the current 1,100. Let's look at the total for this one, 12,600 plus 13,000 received from subscription paid in advance. All right, and then minus 800 because that's from the prior year, and then 1,100 for the current year. So that should that gives me 14,200 of subscriptions for the year ended 30th April 2019. So the correct answer for multiple choice 26 would be option D, right? So 12,600 were received in 2019. 1,300, we will add 1,300 because they must have been earned in 2019, right? They were paid in advance, so we will need to include that in 2019. We will deduct 800. We will deduct that this is not 8,000, right? So it's only 800. We will deduct 800 because that must have been included in the prior year because it's subscription in arrears, 800. And then we will add the current year, 1,100 for 2019, which is in arrears. So that's why the correct answer for multiple choice 26 would be option D. Let's look at multiple choice 27. That's about statements. I cannot fit in 27 and 28 in one screen, so we will do 27 first and then move to 28. So 27, which statement about the accumulated fund of a society are correct? A surplus will increase the accumulated fund and deficit will reduce it. That's correct. It includes all monies received and paid during the year. No, we need to do some adjustments that we have just seen in multiple choice 26. Members cannot make drawings from the accumulated fund. That's true. The accumulated fund is shown as an asset in the statement of financial position. Not really. That's an equity part. Accumulated fund is equivalent to retained earnings, actually. So the correct answer for multiple choice 27 would be option B. Statement 1 and statement 3 are correct. So the correct answer for multiple choice 27 is option B. Let's look at multiple choice 28. Multiple choice 28 is asking what was the prime cost of manufacturing. That's the direct cost, right? So that will be 186 plus 75. These two are definitely direct cost. Let me look at the others as well. Machinery depreciation is not. Factory supervisor salary is not. And others are as well. So all these are actually not direct cost. So this should be 261. So the correct answer for multiple choice 28 would be option B, $261,000. Let's move on to multiple choice 29. So we can see 29 and 30 together in this one screen. So we will do them together. So multiple choice 29, Sam's work in progress was 6,500 at the start of the year and 11,200 at the end of the year. When Sam prepared his manufacturing account, he forgot to make the adjustment for work in progress. How did the omission affect the cost of production and the gross profit? So how did it affect cost of production and gross profit? So he forgot to make the adjustment for this closing inventory, right? So our cost of production will definitely be overstated. If our cost of production is overstated, right? So what is gross profit? Gross profit is sales minus COGS. If this is overstated, our gross profit is going to be understated. So the correct answer for multiple choice 29 would be option B. Let's look at multiple choice 30. Roshan's sales for his first year of trading was $55,000. His gross profit was 20%. The closing inventory was 3,200. What were the purchases for the year, right? So we need to calculate the purchases for the year. So we will start with sales revenue, 55,000 times 20%. That will give me gross profit margin. That will give me gross profit, actually. If you remember the formula for gross profit margin, it's gross profit over sales revenue. So when we multiply it by when we multiply gross profit margin with the sales revenue, that will give me gross profit of 11,000. So this is my gross profit, right? 55 minus 11, 44 gives me, what is this? This is my COGS, right? So this is my cost of goods sold. Since this is his first year, there isn't going to be any opening inventory. So our opening inventory is going to be 0, right? How do we calculate COGS? COGS is opening inventory plus purchases minus the closing inventory. We have COGS as 44,000. I just need to add 3,200 to this. So we will add 3,200 to this. So this will give me 47,200. So the correct answer for multiple choice 30 is going to be option D. Right. Just if you remember the equations and formulas, this question is fairly easy to compute. So the correct answer for multiple choice 30 is going to be option D. Multiple choice 31, Mariam does not maintain a full set of accounting records. Only the purchases for the year and asset and liability values at the year end are known. Which financial statements can be prepared using this information? So only asset and liability are known. In terms of income statement, we only know purchases. We do not know revenue and expenses. So income statement cannot be prepared. So option A and B are incorrect for sure. The correct answer will be option C, because we know asset and liability. So statement of affairs can be prepared, but not income statement. So the correct answer for multiple choice 31 would be option C. Let's look at multiple choice 32. So multiple choice 32 is asking us to calculate the rate of inventory turnover for 31st December 2020, for which the formula is COGS over average inventory. COGS in this case is 120,000 cost of sales for 31st December 2020. We just need to calculate the average inventory. Average inventory would be opening. So opening of 2020 and closing of 2020, that would be 4,000 plus 8,000 over 2. So this is 12 over 2. This is 6,000, right? So my 120,000 over 6,000, this is, and this gives me 20, right? So the correct answer for multiple choice 32 would be option B. 20 times would be the rate of inventory turnover. Let's look at multiple choice 33. So multiple choice 33, Miranda's gross profit fell from 25% in year 1 to 15% in year 2. So gross profit went down by 10%. What has caused this? Which may have caused this? Miranda paid less for her purchases. No, Miranda purchased fewer goods in year 2. No, because then this should actually shoot up our gross profit. Miranda reduced her selling prices in year 2. That is actually correct. Once you reduce the sales price, that reduces your sales revenue. Once your sales revenue is down, your gross profit margin is going to go down, because if you look at the formula, it's GP over sales revenue, right? So the correct answer for multiple choice 33 would be option C. Miranda reduced her selling prices in year 2. Reduced selling prices means less sales revenue. Let's look at multiple choice 34. Ralph wants to compare the accounting ratios for his business with accounting ratios of brother's business. What would prevent Ralph from making a meaningful comparison when they use different accounting policies? So they must be consistent in using similar accounting policies for comparison, because otherwise it's not like-to-like comparison. So the correct answer for multiple choice 34 would be option D. Let's move on to our last multiple choice 35. Which statement correctly describes the principle of realization? Profit is earned when a check is received from. So this is about revenue realization when company can record revenue in its books, right? So profit is earned when goods are supplied and ownership passes to the customer. So the correct answer for multiple choice 35 would be option C. That's the revenue recognition principle. When the goods are delivered and passed to the customers, once all the performance obligations have been satisfied, only then company can record the revenue. So the correct answer for multiple choice 35 would be option C. So I hope this video was helpful to you in understanding May-June 2024 exam paper. So please do not forget to share this video with your friends, give it a like, comment down below, and subscribe to my channel for more videos like these. Thank you very much for watching this video. Thank you.